All right. Hi, everyone. Thank you for joining us this morning. My name is Braden Dennis. I be your moderator today. And, we got the ultimate buzzword panel that they gave us, the latest catchphrases in financial services. But I'm going to talk about a couple things that are specific and relevant to the people in this room. By way of introductions here, I have Jerome. Jerome is a cross-asset strategist with over 15 years of investment banking. He's busy incubating new ideas and decision support algorithms in AI. Eugene, we have a leader in financial information visualization. You head up the Chart IQ business, which is now acquired by S&P Global Market Intelligence. Dr. Leslie Cantham, how are we doing there? Founder and CEO of Turin Tech, a company at the forefront of revolutionizing software engineering. And Jan, you are the founder of Reflexivity, formerly Toggle, hails from asset management and algorithmic trading, has a background in quant finance, and you spent most of your career with Stanley Druckenmiller, which is kind of cool. I'm the CEO and founder of a company called FinChat. It's a fundamental equity research platform, and I'll be your moderator today. Quickly, there's a lot of smart people on the floor that are not on the panel too. So I encourage you to chime in, put your hand up, engage in conversation, ask questions. I'll go for there. Leslie, let's start with you. The big topic is obviously AI. Your company's directly involved in that. You're doing the hard, nerdy stuff that the people are very grateful for. What's going to change? And I think to counteract that and invert the question, what's going to stay the same?
Yeah, sure. So AI is here to revolutionize a lot of the services that we see within financial institutions. What's going to change is that it's going to be more about AI-driven optimization and sustainability as well. What that means is that in particular, for what we do is using AI to optimize code, make them more faster and efficient. And sustainability element of that is to reduce the costs, i.e. your cloud costs, your compute, your energy consumption. And that's what we're starting to see as well across the space. What stays the same? Actually, as AI is always evolving, you'd see very little of it staying the same, though I would say that traditionally, we see AI being used in data analytics, analysis of big data. So this will still continue to be the mainstay for industries.
Anyone else have any comments on that?
Yeah, I do have one. So at Trading Central, we service roughly 300 clients around the world, servicing a community of 150 million traders. And for us, AI represents more an idea of personalization at scale. It's really this ability to answer questions to any user, whether you are a seasoned trader or a newcomer, in their own words. And that's what we think is very, very valuable here. And that's really changed, because otherwise we always send our stuff or insights the same way to everyone. We do change a little bit the colors and everything, but it's slightly different. So it brings something new. What remains the same is financial markets. So don't expect AI to give you predictive analytics and you will make money all of the time, because it won't happen, clearly.
It was programmed by humans after all, right?
Exactly.
Yeah. And to follow on that, I mean, obviously it's changing the way that people do research, gather information, but as you just mentioned, trading operations, maybe not, and maybe for a good reason. Do you see, and open to anyone, do you see that being the next frontier, or is that an area that whether it's a human or a robot, we're going to act irrationally regardless?
Yeah, I think we're going to act rationally. I mean, markets are this collective opinion of everybody, right? And that's not going to change. We may have new actors in the market with AI, We did years ago when algorithmic trading first came out and trading systems first came out. They were new actors, but have they fundamentally changed how markets work? No, right? Markets are about providing liquidity, and that is the foundation. AI makes people more efficient. It's going to make people more productive. I think it will benefit larger institutions first before it cascades down to helping smaller and retail, private investors. But I think that as Jerome was saying, markets are markets, and they will continue to operate the way they do.
To follow on that, Eugene, a really relevant trend right now in fintech is what is being called the degenerate economy. The degenerate economy, coined by one of my VCs at FinChat, it's the idea of the like Las Vegasification of our world. Sports are on, bet on it. U.S. election, fair game. Dogecoin, to the moon. Spin the roulette wheel on your phone while on the toilet. Download our app. This is what's happening. How's this going to play out? Do you think that that's becoming the status quo for consumer-facing fintech apps?
No, I don't. I think that first Chart IQ, is a graphics library. It's used across a spectrum of applications, 250 applications across the planet, hundreds of millions of end users using Chart IQ, and we have some of these gaming apps that are using Chart IQ. So we've directly worked with them, and look, people love taking risk, right? It's inherent in who we are as human beings. They want to take risks, they want to gamble, and this is an easy access point to do it. But fundamentally, there's a difference between investing and gambling, right? And that is that in investing, the mathematical advantage, you can put it into your favor. With gambling, you can't. So I don't think these things really change financial markets. I do think that they invite more people to participate, right? Which is a good thing. The more people that participate, the more liquidity that's ultimately created. But these gaming apps themselves don't create that liquidity. They are sort of a bit of a sideshow.
Yeah, I will completely agree with you. I think the gamification is really to answer, to provide answers to new breed of investors, the younger ones that need something cooler, funkier than what in the financial industry we used to provide for, like the beginning of time, which everything was like PDF, dark, black and white stuff, 20 pages documents. They want something quick, very easy to understand. So that's the reason why we saw this trend. But ultimately, we come back to the classic. We have to do our due diligence, financial analysis, technical analysis, news and sentiment, fundamentals, where Jan is actively working on yourself. But that's not necessarily a huge trend.
Any other comments there on the degen economy?
Well, I don't have a comment directly on gamification, but there were a couple of interesting comments that I think are worth thinking about, which is there's this prevailing view that's very easy to subscribe to, that AI is in effect going to be this very friendly assistant, almost like, oh, it's the intern that can help everywhere. I think that's a temporary phase. I think that eventually AI will outgrow that phase, just like you start as an apprentice and then you become a master at something. So I think also what Jerome was saying, I'm not sure that's true, that you won't be able to get very predictive analytics out of AI, because if you believe that there are smart people extracting alpha from the market today, there's no reason why AI couldn't do that also. Doesn't mean that everybody will be given the tool, and so by definition, you can't have everybody making money from the same trades. But I do think that you will see systems evolve that are going to be far better at doing certain types of trades that humans are. It just logically seems to me that the progression we're seeing from all of the different games where unsupervised learning led to AI very quickly becoming expert, markets aren't going to be any different. Yes, they're very complex systems, but they're still exploitable. I mean, humans exploit them with much more limited intelligence. So I do think eventually AI will do the same.
Kind of like chess, poker, these solved games by AI.
Yeah, and I think usually the counter argument to those is, well, but you have a very well defined set of rules, and so once you give the AI that, of course, it can ultimately do better. But actually, we've seen examples of it doing better in other cases where actually the set of rules was not as well specified. And just like humans, it try to do the best it can. Doesn't mean that it will be always right. It just means that it can be right often enough to actually be profitable, and that's ultimately what you're aiming for.
I wanted to add to that as well. So I agree with your point on that. I think that AI systems are essentially expert systems, and they don't necessarily have to work within a rule-based environment. They're very good at learning outside of the box, as it were. So we see already a lot of machine learning. You mentioned unsupervised learning, but there's various different techniques, that we see from deep learning to now AI using graph construction-based methods to map the domain that they're looking at, and we're seeing this acceleration of many different types of applications. So going back to the point about gamification, one of those things that we see is that, yes, like they open up the market for a lot of wide participants. And what you're going to actually want to see is you're going to see applications that are starting to churn out that are much more faster, efficient, with the use of AI tooling to help improve the quality of those applications and the experiences for those individuals.
Did anyone bet on the election? Anyone? You win? You make some money? Attaboy. Good man. Let's talk about data. It's looked at as a unique competitive advantage in our world, a source of new business for a lot of data providers with generative AI. How do you see the large and up-and-coming data providers, playing a role in this space? Maybe we'll start with you, Jan. Being a financial data aggregation and display of via AI.
Well, I think data itself has over time gotten commoditized. I think it's easier to get than ever. The problem I think we have is that there's so much of it that the infrastructure to actually exploit it and get insights from it has not kept up with this. So what I think there was a discussion earlier about how Leslie, I think you were talking about this, how one of the things that will stay the same is that AI will still be used and employed in the space of data analytics, which I think is correct. What I think is different is that unlike some of the methodologies we were using before, which were about just predictive analytics, it is now acting also as an intermediate between a human analyst and a variety of different engines that can actually run, manipulate, and analyze the data. And I think that is a huge, huge moment for data providers because it will unlock the wealth of insights that currently resides in the data. If you think about how the analysis works currently, many of those who can't just sit down and write a quick Python script in 5 minutes will effectively end up downloading a lot of the data into a spreadsheet and then analyzing it that way. That is extremely cumbersome. And so often if you have a pretty good rule of thumb, you'll just resort to that. I think what will happen now when you can just articulate something and get it done in a second, many, many more decisions will be anchored in data analysis because it'll just be much easier to do. So that's what I think is, as they say, the more things change, the more they stay the same. I think that's sort of in that vein.
As a follow-up, what about in the way that the data providers source? Do you think that, of course, there's a way to extract insights from it, but anyone have any particularly hot takes on how it can actually be created, some of these assets?
I mean, I think one of the interesting things that we see and where ChartIQ excels is being able to pull data from different sources, right? And every firm has its own data output, right? And so, it's how do you take the commoditized data, right, and blend it together with your proprietary data, right? And, look, data is the fuel that's driving this. And what is your data governance policies? What is your QA behind that data? I think while, yes, it is getting broader, we see these massive moats of acquiring data that protect companies like S&P Global, like Bloomberg, like Reuters, because they have so much content, right? Like FactSet, right? There's so much content to get that access, right? But then how do you normalize it, provide it to a direct access to be pulled and used by these AI engines? And then, as I was saying, to blend it back with that fuel. We were chatting before, and I was even thinking about, oh, you have proprietary data in your system that people may be interested in seeing, and so you have this exhaust flow that comes out of it, and I want to blend that together with another form of analysis to arrive at my conclusion, tell my data story.
Yeah, I would agree with Jan and Eugene here. Ourselves at Trading Central, we have a huge amount of data we have to deal with and send to our clients. And we know that we are in a world of infobesity. There's way too much data. So there's more and more information and less meaning. So AI in this case is a fantastic tool to help you, to help an investor from retail to even a hedge fund manager to find insight, to cut through the noise and focus directly on what's meaningful. And that's where it's interesting because, well, so many data, it's crazy.
Yeah, on that point, I want to mention that Jan was correct in saying that there's a huge amount of data out there at the moment. What we should also consider as well is that actually, equally, there's a large amount of legacy systems in place with data that's associated with that. And then driving meaning from that is very, very tricky and very difficult, right? So the use of some of the AI methodology that we have right now is moving more into the space of what you're seeing with generative AI, where there's this exploratory capability to understand what your data is. But then there's also these new types of data that we're seeing as well, because traditionally we saw data as mainly big data, financial data, text, numbers and so forth. But now data consists of lots of things. It could be legal documents, could be contracts, right? And it could be software code and applications, right? So we already see some products where they're trying to utilize that to essentially predict what you may want to write for code or what document that you need to use and what you're going to write. So all this is context analysis, and we're moving more into AI-driven context.
Anyone in the crowd have an example of something that they've used at their company in the last year that has had one of those you show your colleague mind-blowing moments and actively deployed to customers? Anyone want to share? Great. Yeah, good. We need more coffee, guys. Come on. More coffee. Yeah. Yeah. Synthetic data? To recap the question, synthetic, I could hear bits and pieces of it. Yeah. Yeah.
I mean, people are using machine learning to generate synthetic data sets, right? Of data that is real world that they've trained upon. So we're kind of seeing that. And in terms of, for instance, for financial trading, especially in the automated market making and algo trading area, that's also quite lucrative for them to get data sets that are very unique to the particular market that they're looking at, so that they can stress test and model based upon that, and then try and apply that to real world market forces. So I guess that synthetic data is been around for a little while. The fact that it can be more AI driven rather than just being stochastically generated is probably the latest innovation that we're seeing at the moment.
I think to pick up on that, right, one of the things that, as I was saying, all these different data sets, I think synthetic data fits into that. And it was said a moment ago of, that AI becomes this agent to discover data, right? And up to now, we have these massive databases that have basically been locked up to the quants, and the data scientists have access. Well, now we have AI engines that empower many more people to harness the power of that data. And that's where we're also trying, from a visualization point of view, trying to empower end users, right? Everybody in this room, everybody in finance has an incredible understanding of data, right? Far beyond what the average person does. But very often people are limited in what they can actually see and touch and access and make decisions on. And that's where AI becomes incredibly powerful, because it provides that data scientist that we're all begging to talk to, but there's only one in this room, and we can't all talk to him at the same time.
I'm here.
Okay, I'm talking to you.
Question. You got this, man. You got this.
I think it's a good question. So, obviously, when I was a lot younger, when I was probably a toddler, when they started looking at computerizing exchanges and making trading more automated, there was questions like, how could these systems be trusted? Reading about them. You see humans still in that loop, right? Like the systems we use every day, we depend upon them, but there's human intervention in that. Now, with what you're mentioning about in respect of AI, in terms of AI generative models, AI optimizations, AI everything that you can imagine. Yeah, of course, like you're still gonna have humans in the loop inside of that. There's people that have constructed the AI, there's people that are tuning it, constantly evaluating its results and progress. Nothing is truly left, to run by itself without the intervention of a human being to be the input and decide where it's going to go. We see that more often with algo traders, where you'd be hard pressed to see an algo that's running by itself for 10 years, for example, right? They take it offline, they evaluate it, see the results, put it back in. If it doesn't give you the results that you want, don't use it, change the book, So that's essentially.
Yeah, I remember back in the early 90s when I was first building trading models. I'm that old. And, I remember sort of the dream of like, okay, as we build these models, as they get more and more efficient, then we're going to all be able to go spend, time on the golf course, or for me, mountain biking, and let the system run itself. I haven't seen that. I don't think anybody here does that.
And also to answer your question, that the decoupling between the fundamentals of those companies and potentially a lot of trading activity on top, that already happens today, every single day, right? So I don't think that that's a significant change from reality today. I think, overall, market participants have different duration that they're looking to optimize for, whether it's the next 6 minutes or the next 6 years, right? So I think that there's always going to be opportunities if you're mismatching duration.
I want to add something to this, because actually it's a pretty fascinating question. If you did have a greater proportion of AI traders in the market, would that exacerbate, like in the long term, I think every markets can stay irrational longer than you can stay solvent. We've heard that before, but eventually they do correct. The question is, in the short term, with higher proportion of AI traders, does that exacerbate these deviations or not? And I guess principally that depends on whether or not you think that these deviations depend on certain behavioral properties that humans are subject to, but maybe AI might not be, right? Like, we really like the power of story. We really do fall prey to sort of recency bias and so on. If you remove some of those elements, does that mean that actually AI trading could potentially, far from exacerbating, actually make sure that some of these deviations don't become as extreme? I don't know what the answer is, but it would seem that conceptually you could argue that it makes them better, because it's able to absorb more information and be less subject to some of the biases that ultimately lead to irrational exuberance and so on.
Yeah, but it's historically we have seen also some examples like with the robo-advisors built the same way, and we've seen some flash crash that were actually quite fascinating. That means they might think exactly the same way. That means volatility might be bigger at some point. So, and markets remain a zero-sum game. So there's one winner, there's one loser, and that's.
I think robo-advising was to an extent like fake AI, because that was effectively just creating these frameworks that all of them were following, but at the end was just trying to effectively do some form of an efficient portfolio. So it's a lot more like portfolio insurance that you had back in the 80s than it was something that was truly trying to adjust. I think what we're looking at now and what we could be facing is dramatically more powerful than that framework. That's why I'm thinking that you don't have that positive reinforcing feedback. The system could actually reevaluate everything on a daily basis and then get out of the position, because
it's a fascinating question.
Yeah.
I love it, right? Because, I said before, right, the market is the sum of all of our emotions and opinions. And what drives markets but fear and greed, right? And that's why the downside is often, particularly in the world of equities, is so sharp relative to the upside, right? We climb the wall of worry, right? And then we all get scared and we jump ship and boom, volatility jumps way up, right? But if you have an AI actor that's able to remove fear and emotion, or does AI somehow end up learning that from the market itself, right? Because ultimately it's still reading human emotion. I don't know, it's a great question. I love it.
I'd like to thank everyone here for joining us this morning. We're going to wrap up the panel now. You guys will all be here all day, so come say hi wherever we are today, and we'd love to meet you all. And it's always good when Benzinga runs their conference in a November that happens to be a bull market. So everyone will be in high spirits today, and thanks for coming, everyone.